Welcome to the Exercise 2-5 tutorial. In this exercise, we are to prepare journal entries for a number of transactions. Before we begin, we should review the debit and credit rules. We'll use a T account format for ease of presentation. Increases in assets are recorded as debits, while decreases are credits. Moving to the other side of the accounting equation, debits and credits are the exact opposite to assets, where decreases in liabilities are recorded as debits and increases as credits. The same is true for equity, where decreases in equity are recorded as debits and increases as credits. It should make sense that the debit and credit rules are the same for both liability and equity accounts because they are on the same side of the accounting equation. In 1, share capital was issued for $3,000 cash. Cash, an asset, is increasing, and share capital, an equity item, is also increasing. So cash is debited and share capital is credited. In number 2, $2,000 worth of equipment was purchased on credit. Equipment, an asset, is increasing, and a liability is increasing since the equipment was purchased on credit and not for cash. So equipment is debited and accounts payable credited. In number 3, $400 of cash was paid for this month's rent. Cash, an asset, is decreasing and equity is decreasing because an expense has been incurred. So rent expense is debited and cash is credited. In number 4, $4,000 of supplies were purchased on credit and they will be used next month. Supplies, an asset, is increasing, and a liability, accounts payable, is also increasing. So supplies is debited and accounts payable is credited. In number 5, customers were billed $2,500 for repairs made to date. Accounts receivable, an asset, is increasing, and equity is increasing because of a revenue. So, accounts receivable is debited and repair revenue is credited. In number 6, cash was paid for 1/2 of the amount owing in transaction 4. Cash, an asset, is decreasing, and accounts payable, a liability, is also decreasing. So accounts payable is debited and cash is credited. In number 7, $500 cash was collected regarding the amount billed in transaction 5. Cash, an asset, is increasing, and accounts payable, also an asset, is decreasing. So cash is debited and accounts receivable credited. In number 8, 1/2 of the equipment purchased in transaction 2 was sold for cash of $1,000. Cash, an asset, is increasing, and equipment, also an asset, is decreasing. So cash is debited and equipment is credited.